Hey, what's going on YouTube? It's your boy the Stock Dude back on the prowl again. First off, I want to take this time to wish each and every one of you guys out there a happy holiday season. Now, secondly, I want to also thank each and every one of my subscribers out there and thank all the viewers out there for supporting this channel. I'm not sure if you guys have noticed or not, but if you normally watch my videos on a regular basis, you probably have noticed that you see something in those videos that you have not seen in the past, and that is commercials. So I'm proud to announce right now that your boy, Stock Dude, has finally gotten the YouTube channel monetized. So now they are able to show commercials and ads. Hopefully not too many. But I'm proud to announce that the channel is finally monetized, and I couldn't have done it without you. So thank you to each and every one of the subscribers and all the viewers out there and all the comments that's left. I appreciate them. I do my best to respond. And once again, thank you from my heart to you. Now, check this out. I got two stocks that I'm going to add to my portfolio probably on Monday. Now, these two stocks, actually both of them, are in the EV sector. Now, for those that don't know, EV stands for electric vehicles. So both of these stocks are involved in the EV sector. Now, the EV sector has been on fire. I mean, hot. The whole year, the EV sector has been blasting higher, smoking, on fire. So I decided to add some more shares of two companies that I already own, actually. Now, one of these companies reminds me of Tesla. I made a video about it, a while back, and the more I check it out, the more I see the similarities between that company and Tesla. Now, the second company that I'm going to add to my portfolio, you probably have not heard of. Now, this second company does not make EVs or does not make electric vehicles like Tesla does, but this second company benefits from every EV on the highway and every EV on the road. Sooner or later, they will need the services of this second company. So make sure that you stay tuned, because we're going to talk about it all. Stay tuned. Hey, what's up, YouTube? It's your boy, the Stock Dude, and we are back. Now, I mentioned in my intro about Tesla, so I just want to kind of show you guys what I see in the price action of Tesla. Now, these candles right here represent 1 day's trading. So what I noticed right off the bat in Tesla's chart, bring your attention down here to the bottom right hand corner of the screen, and right now I'm on my favorite website that I use for tracking stocks, finviz.com. Right here you notice this big green volume bar. Tesla normally trades an average volume of 46 million shares on the average day's trading. Shares bought, shares sold. But on Friday, they traded over 218 million shares were traded, bought and sold on Tesla. Now let that sink in. Average volume bought and sold on a day, 46 million. On Friday, they traded 218 million shares bought and sold. Now, I'm going to make this as simple and as plain as I possibly can. Tesla's stock price is going up. That's just what it is. I don't know when it's going up, and I don't know how high it's going up. But this right here, this big green candle, this big green volume bar right here, that don't lie. That means people that have money, institutions, hedge funds, millionaires, billionaires, they're pushing the price of Tesla way up. All the way up. It's going up. I'm just telling you what I see, not what I heard. 218 million shares plus bought and sold. 4 times, over 4 times the normal volume for Tesla. So if you own Tesla, congratulations, you made money, and I'm here to tell you that you're going to make some more because it's going up. Now, something else I want to bring to your attention, the year-to-date performance of Tesla. In other words, how much percentage-wise has Tesla gone up in the past 1 year's time? Tesla has risen in price over 730%. Let that sink in. Year-to-date performance for Tesla is 730%. Now, in my opening intro, I told you that the company that I'm going to add shares to reminded me a lot of Tesla. Now, if you can afford Tesla, God bless you. Get some more, buy some more. But Tesla shares are trading at $695 a piece for one share, almost $700. Now, if you got that, I recommend that you buy more of Tesla. But for those of you who don't have almost $700 to purchase stock in a company, the stock that I'm going to buy will allow you to basically get the same benefits as Tesla. And it won't cost you $695 per share. So the company that I'm talking about purchasing next week, tomorrow, is a company by the name of NIO Limited. Now, for those of you that are not new to the channel, you will remember probably a few months ago now, I did a video highlighting NIO. And at the time of the video, NIO was trading at around $31 per share. Fast forward to now, in December, NIO is trading at over $46 per share. Now, I mentioned the past year-to-date performance on Tesla was over 700% gain. Look at NIO. Performance year-to-date, 1,062% gain. Let that sink in just for 1 second. Tesla went up over 700%. NIO over 1,062% gain. Year-to-date performance. That's crazy. Crazy growth. And something else that I like about NIO, NIO's stock price is only $46.72 per share. Now, if you look right here in July, you'll see the boys come in hot with the buying activity. That's when NIO finally took off price-wise. At that time, NIO was trading at $9.04. I wish I would have known about NIO back in July, but I didn't. I missed it. Sometimes it happened. So as you can see, since the early part of July on up through November, NIO has been on a tear price-wise, and price action-wise. NIO has been going nuts. Now you see NIO past few weeks or so has started to come down, and right here where this big green candle is, it formed a massive support area right around $40 or so. went up a little bit, came back down to that support area. And one of the most important things that I noticed about this chart is that NIO held that support area because they did an offering in order to raise money. Now, when a company does a stock offering, a lot of times that dilutes the price of the shares of stock. So an offering just means that they put more shares for sale out in the market. And that overabundance of shares a lot of times causes a stock price to come down. So NIO during the time of the offering was right around here when it started going down. It created a lot of selling pressure. But the best thing about this chart is that even with all of that selling pressure and diluting the share price by extra shares being in there, being sold, they do that. The offering is done to raise money for the company so they can put money raised back into the company. So they do that to raise money, and it creates selling pressure. But even though it had a lot of selling pressure, it still held this blue area, this cyan color line of support. See, it holds it, comes down, bounce off of that line, and has been going up for the past 4 days. Now, this area of support has created a brand new buying zone. So for those of you, and I know it's a lot of y'all out of here that did not keep the shares of NIO that you have bought in the past. You sold them for a little gain, which I don't have any problem with that. I ain't gonna never give you a hard time about gaining money. But for those of you that maybe want to take this time at this buying level, right here where we are now, between $40 and $46, you can pick up some shares of NIO. Because I'm gonna tell you, from what I see, NIO's price is going higher. Now, I got some notes on NIO, and I'm gonna give you the real deal because that's what we do on this channel. We come like a jab, straight from the shoulder. So I'm gonna tell you what's what. I'm gonna give you the good, I'm gonna give you the bad, and I'm gonna give you the ugly on NIO, just like Clint Eastwood. I'm gonna give you the good, the bad, and the ugly. Now with NIO, the good, NIO is growing like a weed. Once again, right here in July, you see the price of NIO, that's when it really started to take off. Right around $9 a share and went on up as high as $56 and some change per share. All the way from $9 up to $56. Gosh almighty, man, that's like 7 times your money, 7 times your investment. So the good part for NIO is growing like a weed. Now they got a brand new order coming in. People want these cars, so they have new orders that's coming in on a regular basis. And from what I understand, NIO is ramping up production, trying to meet the demand that they have for these cars. Now, NIO is the best EV car maker in China. The best. Just like over here, our best is Tesla. Over in China, their best is these dudes right here, NIO. Now, Tesla is an excellent company. I don't have any problem with Tesla. But Tesla's stock price is almost $700 per share. Wouldn't you like to have been around to buy Tesla when it was trading at $10 a share, $20 a share, $50 a share, even $100 a share? You could have made multiple times your money. This right here, NIO, gives you as an investor the opportunity to multiply your money many times over, because I'm telling you, NIO is like the baby Tesla. I'm not telling you what I heard, I'm telling you what I know. So now is your chance, your chance now to buy into the baby Tesla while these shares are cheap. Now that's the good part. Now the bad part, what if NIO is not able to fill those brand new orders for those cars. What happens if they can't fill the orders? I'm going to tell you, that's the bad part. Now, NIO has been doing a lot of promoting and a lot of talking about the orders that they have coming in. But if they can't fill those orders, let me tell you something. That $46 stock price is coming down. If you have a lot of bad news, and if it actually turns out to be true that NIO cannot keep up with the demand for their new cars, those EV, electric vehicles coming out, that stock price is coming down, and it's coming down hard and fast. Down goes Frazier. It's coming down hard like that. That's the bad. Now, the ugly part to investing in NIO is this right here. NIO has a little issue that I don't think will actually happen, but if it does, it'll be ugly for NIO. But before we do that, I just want to take this time to ask you guys, if you haven't done so yet, I ask that you please hit that subscribe button and turn on your little notification bell. That way, when the next video comes out about NIO, Tesla, or anybody else, we do stocks on this channel. We do investments on this channel. So if you hit that subscribe button and turn that notification bell on, then you'll be alerted as to when the next hot video from your boy comes out. Now, back to this. I'm going to tell you the good, the bad, and the ugly. I've already told you the good on NIO. I've already told you the bad on NIO. This can be ugly for NIO right here. Trump signs a bill that could lead to the delisting of Chinese stocks, including NIO, Li, Xpeng, and even the massive Alibaba stock. All of these stocks, according to this legislation that Trump signed, this bill could possibly be, believe it or not, delisted from the U.S. stock exchange. Now, for those that don't know what delisted means that they could possibly pull those companies' stocks off of our U.S. stock exchange, and you won't be able to buy them or sell them. Good Lord. It says right here in this article, U.S. President Donald Trump has signed a bill calling for the delisting of foreign companies that don't adhere to the same accounting transparency standards that security regulators impose on public U.S. firms. Now, why it matters, it says the Holding Foreign Companies Accountable Act takes aim at Chinese companies and drew rare, strong bipartisan support in the U.S. Congress before arriving on Trump's desk. The act says delisting could happen if a given company does not comply with audit inspections 3 years in a row. Now, what all of that means is this. China, for some reason, has a tendency to kind of, what's the best way to put it? Cook the books, so to speak. You know, a lot of the earnings, not necessarily for NIO and Xpeng and Li and, Alibaba, not necessarily for these stocks in question, but some Chinese companies, they cook the books and they have it make it seem like they're making more money as a company than they actually are. So this bill that your boy Trump signed is basically making it so that these companies, Chinese companies, have 3 years in which to adhere to all of the regulations that we have over here in the United States, which means that our regulators need to look in the books and check things out, make sure that NIO and Alibaba and Xpeng and the Li company, them guys are making as much money as they say they are making. But the thing that I want to stress with you guys is this. Yes, that can be ugly if it happens. But I'm going to tell you something. I don't think that's going to happen because you got millions and millions of dollars behind NIO. So this basically means that NIO and other companies have 3 years to comply, to have our U.S. regulators look over their books to make sure that they're not cooking the books, saying that they're making more money than they are. They got 3 years before they even have to worry about doing that. Now, let us say that it turns out to be true. God forbid, but let us say that it is true. And NIO's earnings are not like they say. You got 3 years before this is even an issue to even be checked out. Do you know how much money you can make on NIO in 3 years? God forbid it's true. But if it's true, you got 3 years to hold this stock and let it continue to do what it do, man. Because it's been going up since July. Look at this thing. And once again, the year-to-date performance on NIO is 1,062%. Now, if the growth going forward is anything at all like it has been in the past, do you realize how much money you can make on NIO? So I don't believe it's true, and I doubt if they delist it, but I'm buying some more. Because if something happens with them getting delisted, you're going to know about that before it actually happens, because it's going to be all over the news. If that's the case, then, hey, sell your shares and get your money, man. But I doubt, seriously, if it happens, it's possible, but I doubt it. But if it does, you're going to get the heads up. It ain't like you're going to wake up one morning and then all your shares are going to be going out of your account and they'll have a big zero in your account and like, ha, 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 I got you. It ain't going to be like that. So you have plenty of time to get rid of these shares. But as for right now, your boy, I'm just telling you what I'm going to do. And by the way, I'm not a stock expert, nor do I play one on YouTube. So make sure that you do your own due diligence. Don't just take my word or anybody else's word for it. I am not a financial advisor, but what I do know about is these charts. And these charts tell me that NIO is going higher. That's just what it is. Now that's the first one of the stocks that I am adding to probably tomorrow on Monday. Now the second stock, check this out. Now my second stock is a company that will benefit from, believe it or not, companies like NIO. And this next company that I'm going to buy will benefit from companies like Tesla, because every EV vehicle on the road, every one of them at some point or another will need the services of my number 2 company. At some point, every EV vehicle will need to be recharged. They can't move if that battery in the electric vehicles is not charged. That includes NIO batteries, that includes Tesla batteries, that includes every battery that's on the road. At some point you got to plug it in and they got to power up. So my number 2 stock that I'm gonna add to goes by the name of Switchback Energy Acquisition Corporation. These guys right here. Now Switchback is what's known as a SPAC company. Now a SPAC company, SPAC, a SPAC company, for those that don't know, stands for Special Purpose Acquisition Company. That's a SPAC, Special Purpose Acquisitional Company. What they do, they put up the money to smaller companies and help them go public. And then after the arrangement is over, they've helped the smaller company make money and raise money to better themselves and better the company and better the product. Then these 2 companies, SB E, which stands for Switchback Energy Acquisition Corporation, and another company by the name of ChargePoint. They will merge, and this ticker symbol that you see will change from SBE to whatever ChargePoint's ticker symbol is. So once again, a SPAC company helps raise money for a smaller company. They front the cash. Gotta have somebody to put that cash up, man. I need to get somebody to front me some cash, because I got some things I want to do too. So SPAC companies, holler at your boy. But anyway, that's what a SPAC company does. So it's coming up soon. I've heard that they're going to merge and this ticker symbol will change. I've heard they're going to do it, could be as early as January 2021. So from me to you, I recommend that you grab you some shares. I don't care if it's but 5 or 10. Right now the shares are trading at $35.99. And this right here is going higher, because I'm looking at the price action. See the boys with the money, they came in hot right here in September. Price is just now really starting to rise. So once again, from what I understand, sometime in the first quarter of next year, between January and probably the springtime, Switchback Energy and ChargePoint, which is the company that has the charging stations, will merge. And if you ain't in by then, you might have missed it, because that price is going to be a lot higher. You can always buy at whatever price that you're willing to pay for. But I'm telling you, right now, I believe is a good time to get into this before the merger takes place. Because a lot of people hadn't heard of this SPAC company, the Switchback Energy, and they definitely hadn't heard of the company that has the charging stations, ChargePoint. Now, I got some notes on ChargePoint. Now, ChargePoint, they own almost 35,000. I'm going to say that again. ChargePoint, the company that Switchback Energy will merge with, the company that they're going to change their symbol from SBE over to whatever ChargePoint is. ChargePoint, that company, that's what you want to invest in. They own almost 35,000 charging stations in Mexico, Australia, Canada, and the United States. Let that sink in. 35,000 they own. They the #1 charging company for all these EVs on the road. Eventually, they got to come see ChargePoint to get that battery charge, or you have a brand new NIO up on blocks in the driveway, you can't even move. The battery ain't no good, it ain't going nowhere. So ChargePoint will be that company that can take advantage of the huge, and I do mean huge, undertaking that China and also Europe is going through with these electric vehicles. This is going to be huge. Now, the #2 company that owns charging stations is a company by the name of Blink Charging. Now, guess how many Blink Charging own? Blink Charging only has 3,200 and some odd charging stations. Let that sink in. ChargePoint, #1, has almost 35,000 charging stations. The #2 competitor's charging station total comes to 3,275. So who do you think is more likely to get that money when it comes time to get that battery charged by all these EVs out here? It's going to be these cats, ChargePoint. So those right there are my 2 stocks that your boy, the stock dude, is adding to the portfolio and adding to my repertoire probably as early as Monday, but for sure before the end of the week. NIO, baby Tesla, ChargePoint, which is currently trading under the ticker symbol SBE, Switchback Energy, NIO and SBE, soon to be ChargePoint, are the 2 companies that your boy is adding to his portfolio. That's all I got. Once again, for those of you that are brand new to this channel, thank you for coming by. Make sure you hit the subscribe button, turn on your notification bell, and come back, man, because we do this all the time. I'm the one known as the Stock Dude, and I'm going to holler at you later. Peace.